because we do, and I'm placing another sell short Japanese yen at 104,697, just right here. Okay, order place. So if you're looking to sell short Japanese yen, this is your time. 104,697.
Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. Nissan has trimmed its loss outlook for the fiscal year. It's a sign the beleaguered Japanese automaker is starting to recover from the worst of the coronavirus pandemic's impact. Nissan is now expecting a net loss of $5.1 billion. The company is in the midst of a turnaround plan that involves cutting production capacity by about a fifth. Reddit is rising a wave of attention after users of the social media site drove a stock market frenzy. The company says it has raised $250 million in a round led by Ivy Capital. The funding gives Reddit a valuation of $6 billion. And for the first time ever, the average yield on the U.S. junk bond fell below 4%. Investors seeking a haven from ultra-low interest rates.
We opened position on Japanese yen. You can see it's a short position. So we sold short at 104,697.
Ritika, thanks so much. I'll turn right now to the markets. -8 on the futures, Dow futures -73, but just everything easing away. On the 30-year bond, 2%. We saw 1.93% right now. Gold higher. Fencing?
Tom, I'm looking at, European stocks. They're kind of slipping, but after the last couple of days, they're just pausing for breath is the narrative on the markets. They're trying to figure out some of the earnings, also weighing the impact of rising inflation expectations with stocks at record highs. So this is a continuation of the reflation trade. And really, we did spend a little bit of time looking at yield on U.S. junk bond and that index below 4% for the first time. I have it there. We're looking at through the Barclays U.S. Corporate Index. And if you look at that, there are just a lot of questions, and I'm really glad that Jim Caron is staying with us to make a bit more sense about this risk appetite and what that means for investors turning to risky debt in this relentless yield hunt. Now, coming up on Bloomberg Markets, so we'll be talking to Richard Zoga, the Citigroup Managing Director and Head of Global Debt Capital Markets. That's coming up a little bit later today, 11:30 a.m. in New York, 4:30 p.m. in London. Tom, I'm also looking at record low yield for Italian BTPs. This is on the back of the Premier designate, Mario Draghi, finding a solution amongst warring political parties. This is Bloomberg.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle. themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops. Infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we were having a good conversation about coupons and high-yield junk bonds. Let's get back to Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager. Jim, we were speaking about Bitcoin. I got love messages. I got hate messages on Twitter. We're not sure whether we're coming and going. What's your take on Bitcoin?
So, it's an interesting medium right now. And full disclosure, we don't invest in it in any of our portfolios. But, when I think about it and when I see it, I see it as an alternative store or value that people consider it to be that way. I take no position on whether it is or not. But the one thing I can't take my eyes off is the fact that it keeps going up. And I think that's what's attracting it to so many people. If it were going down, I don't think it would be as attractive. But the fact that it just continues to trend higher it does make some people think that this could be a hedging or diversifying instrument within their portfolios. So I think it's interesting, but really what the backstory is behind a lot of this is that we're seeing a lot of money printing from central banks. We're seeing a lot of quantitative easing. We're looking at money supply measures rise quite a bit, and people are just looking for something else. And right now, that's filling the spot.
Jim, when you look at the stimulus debate in the U.S., very few people say that the U.S. doesn't need a stimulus. I guess it's the size and how you make it targeted or not. Does this go back as an investor to the only question you need to get right this year is whether we're going to see, sustainable inflation?
Yeah, that is the question. I think you can divide the universe of investors into two groups, and those who believe that inflation will be a problem and those that don't. I think everybody agrees that we need some stimulus. It's just always a question of how it gets directed, and very, very importantly, what the fiscal multiplier of that stimulus is. So when we look at a nominal package, say Biden's $1.9 trillion package, probably less than that is going to be what's passed, maybe 1.4 or 1.5 trillion. But the number that we really need to know is what's the fiscal multiplier? How much of that turns into GDP? It's not 1 for 1. Is the number 0.5? Is it 0.2? So it's really about how it gets spent and also how it gets directed. Is it more spending or is it more investing? If it's a one-off fiscal transfer, then in 2022, what we're going to start to see is a lot of fiscal tightening. Because unless we see the same amount of fiscal spending in 2022 as what we're seeing right now, then what you're going to see in 2022, if there's less fiscal spending, is a fiscal tightening. And the market's going to be worried about that too. So whatever gets spent now has to pay dividends into the future, and as soon as next year and the year after that, for the markets to really accept this as something more than just a one-off fiscal transfer. And that is what the debate is right now. We all agree that we need some stimulus. These are hard times, but it's really a measure of what kind of stimulus are we getting, how it gets directed, and ultimately, from an economics perspective, what the fiscal multiplier of that is. And more attention needs to be paid to that part of the argument.
So what does it mean, Jim, given all of these unknowns, how you want to construct your portfolio?
Well, what we do know, at least over the next 12 months, is that there is going to be a lot of fiscal stimulus. If this is a plan right now that's being discussed, currently there's going to be another fiscal stimulus plan probably in the third quarter, fourth quarter that's also going to come. So the markets are getting flooded with a lot of liquidity. The consumer is getting a significant amount of money as well. So consumer balance sheets are good. Consumer credit is very, very good. So asset-backed securities, mortgages, we think the consumer is going to be in really good shape. That and the fact that the vaccines and that the number of cases of COVID are going down at this point, this sets us up for a boom in the second quarter. We're looking at 10, 11% GDP growth potentially in the second quarter. So what's in front of us is probably a lot of pent-up demand and a lot of economic activity. So we need to get through that, and this is all good news. And now we have to then see how sustainable is this? Does hiring really start? Do we get the unemployment rate back to full employment? That's the goal. That's what Janet Yellen's talking about. That's what the Fed is talking about, is getting back to full employment. So these are the things that it's yet to be seen. But so far, early days, is that we have enough stimulus to probably give us a bit of a boom in economic activity for 2021. We'll start to worry about 2022 starting around mid-year to say, is this going to sustain itself? Or will we be dealing with fiscal tightening in 2022 just by virtue of the fact that there will be less stimulus in 2022 versus 2021?
Jim, given all of this, what do you do with emerging markets?
So I like emerging markets. I think that what we're also getting is global growth as well. And you're also seeing energy prices rise. You're seeing commodity prices rise. I think the dollar may not be, falling aggressively right now, but we do think that the dollar will fall pretty precipitously going towards the end of the year. All of these things boost commodity prices, ease global financial conditions. Emerging markets that have higher real yields, we were talking about negative real yields in the U.S. A lot of emerging markets have positive real yields, and they have steeper curves. For a fixed income investor, this allows you to add some duration to buy some good, bonds in areas that are more high beta to the global economic recovery. Global growth is expected to be around 6.5% in 2021. This should really be a tailwind for emerging markets. So we like emerging markets. We continue to add to positions very, very selectively there. And even looking at some of the higher beta emerging markets as well that are more levered to global growth start to look pretty interesting. And also those who have energy complexes as well also start to look relatively interesting as well.
Thank you so much. Jim Caron there of Morgan Stanley Investment Management joining us this morning for a spirited conversation. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. It's a trial where the verdict is almost preordained. The unprecedented second impeachment trial of Donald Trump begins today in the Senate. He's almost certain to be acquitted. 67 votes are needed to convict. That would mean 17 Republicans crossing party lines to vote with the 50 Democrats. Proceedings begin today with a vote on whether the impeachment trial itself is constitutional. President Biden is set to ask 56 U.S. attorneys appointed by the Trump administration to resign. That's a standard process for a new administration. 2 of the federal prosecutors will be asked to stay on because they're working on politically sensitive cases. One is an investigation into the president's son, Hunter. And the fast-spreading coronavirus variant found in the UK has now found a foothold in Florida. That's prompted concerns about fans who flooded the streets of Tampa after Sunday's Super Bowl. Florida leads the US in confirmed cases of the known variant as B117 with 201 infections. And in China, a sign that the birth rate keeps declining. The number of newborn babies registered with the police fell by almost 15% last year. China's population is aging more quickly than most of the world's developed economies. The Communist Party has signaled it's willing to further relax birth restrictions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, coming up on Balance of Power, infectious disease specialist Dr. Celine Gounder, a former advisor to President Joe Biden's COVID transition team. We'll ask, of course, about variations and vaccines. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix in London. I'm Tom Keene in New York. Right now, and well-timed with Bloomberg Opinion, always controversial, is Ramesh Ponnuru to join us on this day of impeachment. And I'm thrilled that he's with us because of an essay a year and a half ago where Ramesh Ponnuru walked through the evangelical church, the GOP, the future of the GOP, and brought in there sort of around Lansing, Michigan, the militia as associated with so much of the GOP. All of that descends down on January 6th and what we see this morning with the second impeachment. Ramesh, tell me about the state of the GOP and the power of the GOP that believes in linking in almost a 19th century sense of militia and evangelicalism.
Well, I think that the Republican Party under President Trump, former President Trump, has been increasingly flirting with political violence and tolerance for political violence. You can see that in Trump's rhetoric from the very, very beginning of his time in the national political stage. And this links up, of course, with existing strains of anti-government and sort of paranoid apocalyptic fervor on the right. You saw that in the militia movement in the mid-1990s.
Okay, guys, and this is how you trade euro. Position closed at 121.04. So all of you guys who placed a stop on profit, you made a profit from your trade. Okay, well done. Close just right here. It took you how long? It took you very open position at about 10:40, and right now 11:40. In 1 hour, made a profit. Well done.
Of legislators that this kind of thing could lead to. And then, of course, it is part of the reason why Republicans are going to be split on this question and why most Republicans are going to side with President Trump. Now, there are lots of other reasons for it as well, but certainly the level of fear of political repercussions. And we've seen reports that in the House vote on impeachment a few weeks ago that there were legislators who were afraid of physical repercussions, that they would be targeted for violence and intimidation if they voted against the president.
So, Ramesh, if the Republican Party, and good morning from London, is no longer the party for law and order, what is it?
Well, I think the Republican Party is trying to figure out what it is going to be and doesn't have a very strong sense of what it is anymore. President Trump, I think, really overthrew the previous definition of what a Republican is, but didn't quite replace it. And now, as he has left office, I think Republicans are sort of disoriented and trying to figure out what they're going to stand for. And this moment of the impeachment trial is going to be one of the moments where that redefinition takes place.
So, Ramesh, I mean, you know, we're talking about semantic. This is, you know, as you say, it's basically, you know, the main argument against the impeachment and removal is that he hasn't, Donald Trump, broken any criminal statute. How does this get reformed? I mean, is there someone going to look at the impeachment process and, you know, the spirit in which it was put in place for it to change for the future?
So I would say actually the main argument, the argument we're going to hear today is that it's not constitutional to convict a president who's no longer in office. You know, impeachment has been successfully invoked once in American history when Nixon resigned rather than be impeached and convicted. The bar in the Constitution for a conviction is very high. It requires 2/3 of the Senate after a majority of the House. Given partisanship, that's very, very hard to reach. And it may be a flaw in the constitutional design because the founders didn't really foresee the emergence of the party system that happened actually pretty rapidly after we started. But it's in the Constitution. It's going to be very, very hard to change that. And so what we have to do, I think, is come up with norms and institutions of presidential accountability that don't require that extraordinary measure.
Ramesh, I'm fascinated, and we see Shelby of Alabama retiring yesterday at 86 years old. You mentioned in your essay a year ago where you were way out front on this. The gentleman from Kansas, Pat Roberts, is retired. Senator Moran takes a senior position in Kansas. What does a Jerry Moran do today sitting there listening to this?
Well, the easy vote for Republicans who don't want to get crosswise with the majority of their supporters who still think favorably of President Trump is to say, I'm not going to get to the merits of this. We just don't have jurisdiction. To find the procedural out to say, well, look, whatever we think of the president's conduct, he's no longer in office, and so this isn't constitutional. And that's where I think most Republicans are going to go, but not all of them. And keep in mind, Trump is already the first president to have any member of his own party vote to convict him in the Senate. So that is, I think, very likely to happen again. And it's an extraordinary rebuke for a president.
You've been such a student of this. One final question, Ramesh, if we can. The future of the former president, can you gauge that now, or does time have to move on before you can judge the future for Donald Trump?
Well, there are a lot of potential Republican presidential candidates in 2024 who would be desperate to know the answer to that question. And it is going to take some time because, one of the things that we have to see is when he's no longer in office, does this hold on the party and his voters start to decline? When he's no longer in the news every day, as much as he will try to stay in the news, does he stop having that kind of sway over Republican voters? We're just going to have to wait and see.
Terrific briefing. Ramesh Ponnuru, thank you so much. Can't say enough about his essays on our political moment in Bloomberg opinion as well. Futures -5 down, futures -51. Just a churn to the market now. Bitcoin down to a 45 level, comes back up to 46,000 this morning. I don't think she'll talk about Bitcoin. Dr. Coronado will join us, some macro policy perspectives on the Fed. Kaplan later with Michael McKee. This is Bloomberg. Good morning.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very
difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary.
I'm placing also a stop on profit for Japanese yen. So if you trade Japanese yen right now, the stop on profit should be at 104.677. 2 pips down. Okay, so you need to place a stop on profit.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we've been talking about inflation. We had a great conversation with Jim Karen, and he really put it plainly. The only thing investors need to worry about is whether they think that inflation is here this year and will stick, or whether there's inflation, but actually we can look past it. So with more analysis on inflation, where it will take hold, and actually what it means for monetary policy, we're joined by Julia Coronado, Macro Policy Perspective President and Founder. Julia, as always, thank you so much for joining us. We have a great chart that I think our Hillary Clark did, looking at the 5-year, and the difference between the U.S. and Europe. Where does U.S. inflation go from here until the end of the year? How sticky will it be?
Well, that's the question. So one, how much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it? And actually this year, we think we're going to have two opposing forces. We're going to get the reflation of airfares and hotel rates, but we're also going to be seeing some downward pressure on rents. That's the normal cyclical pattern. We've already started to see that take hold in a lot of cities. We expect that downward pressure to be shorter lived than most cycles because of the amount of fiscal stimulus, but nonetheless, it's going to be a headwind to actual inflation this year. And then looking beyond this year, it really is a question, as Jim said earlier, how much does this actually lift the labor market? How much does this translate into jobs? We are so deep in a hole. We really need to get sustained inflation. That is not just a one-off change in prices or a restoration of airfares to a more normal level, but an ongoing process of prices rising has to come with a labor market that's also running strong and hot and producing gains in purchasing power that consumers can sustain that. So we're a lot more skeptical on the reflation story. Yes, we're going to get some prices rising this year and the economy reopening and some very strong GDP prints. But to actually change to a reflationary process that's sustained and sustainable, you're going to have to get the labor market keeping pace with this. And that's a much longer road to get back to something that looks strong.
So, Julia, you're expecting basically Fed to look past whatever we would be seeing in terms of inflation this year?
Absolutely. Absolutely. And Chair Powell has said as much. He said, look, number one, we understand base effects, that weak inflation last April is going to produce a pop in annual rates this year. That's not inflation. And then he also acknowledged that we're going to see the reflation of some service prices, and we could see some numbers on a monthly basis that look pretty strong. He also said that's not inflation either. So he has set the bar pretty high for what they're going to react to. And I feel like the Fed is pretty much signaling that they're going to be at this current stance all year under their baseline scenario, which is for a strong rebound. Most Fed officials are talking about GDP 5%, 6%, given the fiscal tailwinds. And that's not enough to move them. They really are going to stay the course until they are convinced the economy is on the right path.
At what level is bad inflation for Julia Coronado? Is it a 3% sustained level, or is it something lower than that?
I mean, 3% sustained would be something that I think monetary policymakers would react to and probably should react to. Again, getting there from here is quite a ways. We could see, again, some strong prints, but that kind of sustained inflation, again, would have to come with wage growth that's running sustainably in the same territory, and a broad-based gain in jobs, not just the people at the top, but the whole spectrum of jobs coming back. So, I think that the Fed, they want to see inflation averaging 2%. That is the goal now. So we do need to see some inflation prints above that. And I think the perfect cycle in the 2000s, we had inflation below 2%, and then we had some inflation that got as high as, I think we touched 2.5%. Then, somewhere between 2 and 2.5 is, I think, what they have in mind. I think that's possible. But remember, Tom, we also have some headwinds that are structural in nature. For example, technology and price transparency that comes with technology has been a headwind for inflation. Right. Even in concentrated markets, firms don't have as much pricing power as they used to.
Yeah, we'll have to leave it there. I wonder about 5 or 6% U.S. GDP and what that means for China, where you get a real boom. Julia Coronado with us, macro policy perspectives. Of course, all of us out front of a conversation with Robert Kaplan of the Dallas Fed. Our Michael McKee will do that in a moment. Futures at -5, Dow futures at -45. And the VIX, it's a churn to the market. Maybe we can get President Kaplan to speak about Bitcoin having a good hour at a 44,000 level. Right up we go. 45 and now 47. Rounded up, 47,000. We had a 48,000 print hours ago. Watching Bitcoin carefully this morning. Looking at the real yield as well. Please stay with us. On radio, on television, this is Bloomberg. Good morning.
That was either illegal or caused disruption. This was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Do you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
is just these levels of dangerous optimism building.
Right now, people are just trading big round numbers.
What we have, though, is a very big cushion that's been building in excess savings.
We're in danger of those markets overheating.
I think that next fiscal bill is going to be right around the corner.
A lot of the US stimulus actually isn't stimulus at all. It's an antidepressant.
You're going to have a more normal recovery with or without the stimulus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity futures down about 4 points on the S&P 500, negative 0.1%. Tom, we hit pause just a little bit, just off all-time highs on the S&P 500.
Yeah, I'm going to call it a correlated pause. You see it really across all markets. I'm going to say 90 minutes ago or so, John, I thought Jim Caron was brilliant, John, and he briefed out to You're the Real Yield on Friday, where he is focused on the real yield, and the immovable object I see is a negative 1.06 on the 10-year real yield. John, that is depressed and driving to a greater negative statistic.
I was catching up with my producer, Jamie, earlier this morning, Tom, and he asked the most important question. I do.
I don't have a producer. How come you have a producer?
In the last 24 hours, I think the most important question he asked was, how hot is too hot? And that's the question we're trying to answer on this program. How hot is too hot, and how big is too big down in Washington, D.C.?
Yeah, well, that's how it is. And a little bit of distraction today with the impeachment, but the stimulus conversation drives forward, and it really infects every single conversation of the market, including Dow, 31,210.
Lisa, some data a little bit later this morning.
Yeah, and it really focuses on jobs. And you ask the question, how hot is too hot? And we have to look back to 2009. A lot of people are drawing parallels to that. And that's certainly what Joe Biden is drawing parallels to that. The jobs recovery was sluggish. A lot of people agree on that. 10 a.m., we will get a read on a leading indicator, U.S. December JOLTS job openings data. Bloomberg Economics expects there to be a slowdown. This goes through the end of the month, so it gives you a more updated look at what we were seeing back when we were seeing some alleviation from the shutdowns, but still very much a dampened economy. 1 p.m., Senate is resuming former President Trump's second impeachment trial. The focus will be on the constitutionality of Senate trying a former president. Does this have any impact on markets? No. Will people be watching it and discussing it? Yes. 1:45 p.m., this does have an impact on markets. President Biden, Vice President Kamala Harris, and Janet Yellen, Treasury Secretary, are meeting with business leaders about the stimulus. And you talk about running the economy hot. There will be an increasing amount of focus, John, on, yes, we are going to have a very steep deficit. What are we going to get with our money? What is going to be the biggest bang for our buck? And that goes to the composition of this stimulus, which a lot of people are looking at.
Do you know what I find amazing about the last week or so? It's as if no one realized how big $1.9 trillion was until last week, Tom. It was like a light went off.
Yeah.
Larry Summers wrote a piece in the Washington Post, and everyone was like, boom, it's huge. Yeah, maybe too big.
Major shout out, John, to Claudia Sahm, the liberal economist, who's way, way out front on this. And Ethan Harris, I can't remember which property I did Dr. Harris with, but John, his math is 4% of GDP plus 9% of GDP is a whopping 13% of GDP. That's a big number.
Big number. Here's the price action this morning. Equity market all-time high to close across the board in yesterday's session. Just a mild pullback on the S&P this morning. We're down 5 points on the S&P. Down about 0.1%, still 3,900 on the S&P 500. In the FX market, euro making a comeback. Euro dollar back through 121, up by about 0.5%. But the move in Treasury yields got everyone's attention in yesterday's session. Just south of 120 at one point, Tom. Right now, down a couple of basis points to about 115.
I know we've got to get to our esteemed guest. John, the Russell 2000 on a log basis, it's got literally curvature. I mean, it's literally convex up.
Small caps to the moon, but not just small caps. Let's be clear about this. Tom, in early November, when a lot of these outlooks were written for 2021, when these outlooks were written, 3,800, 3,850 was bullish. We've had almost a 20% move since the end of October over the next 2-3 months, Tom.
Well, we heard Howard Ward yesterday just flat out say the esteemed long growth big cap guys say 4,400 SPX. That's a new statistic.
Lisa's itching to get in on this.
Well, we have to mention the fact that junk bond yields fell below 4%.
Lisa, we were getting there. We were getting there.
We were getting there. It's totally in tandem with the Russell. It's consistent. But carry on, John.
Lisa, John and I on purpose were holding off on that just just to get you going on a
saving it,
Tuesday
Lisa.
morning.
Okay, let's do this.
Okay, carry on.
Troy Gersky's waiting so patiently over at Skybridge. Troy, before we get to you, sir, Lisa's just got something to say about record low junk bond yields. Go on, Lisa.
Okay, I know you talk about the spread and you look on a historical basis, but we can't really call this, high yield bonds anymore. And there is a question of at what point we are creating so many zombie companies. I know we talk about that a lot, but what the longer term consequences are. And it definitely gives some people pause when you think about what you're getting for your money. At a certain point, why not go into equities, have a bigger upside, and potentially less of a downside if rates do rise?
I love that you already know what my counter argument's going to be already.
Well, I mean, we've done it before.
I know. Let's get to Troy. Troy Gersky of Skybridge, waiting patiently. Troy, is it about the spread still, or is it about the absolute yield? Come on.
It's really about just an overwhelming amount of monetary stimulus in the system, right? And to your point, negative yields, real yields in sovereigns that keep getting more negative as inflation comes back and rates haven't caught up yet. And there's just a dearth of income. I mean, the only markets in the world that have still meaningful cash flow are in structured credit because they got hammered so bad in March and they haven't come back fully, and the fundamentals still look fairly attractive. But from our perspective, and not to back up Lisa and Tom, by the way, thanks for calling me esteemed. But if you're going to make a choice right now where you want to be in the capital structure, at least in the equity part of the capital structure, you still have meaningful upside. That this waterfall of cash and fiscal stimulus can drive higher. Yes, you can get spreads to tighten more, but high yield hasn't been high yield for the last 6 months at least, right? It wasn't even that high of a yield coming into the crisis. So, from our perspective, you have massive money supply, massive fiscal stimulus that's just driving all risk assets higher.
Troy, I've been dying to ask you this question. In the tumult of the last, 3 weeks, what have you learned as an observer of hedge funds about GameStop and all that, Robinhood and all that, and the long short structure of the hedge fund world? Is it forever changed?
Forever is a strong term, Tom. And much of the, obviously GameStop and AMC and stocks like that, I mean, they behaved very similar to what happened in the late 90s, but just on steroids, like everything else is on steroids in this post-pandemic period. And so what long-short equity managers are doing across the board.
We closed position on Japanese yen. Well done, guys. So you ended up in profit again. How long it took us? 11, let's say 25, yeah? Right now, 12:08. Just a little bit over half an hour. Well done. Your trade is closed, so basically, let's look for another trade. Yep.
Profit motive, but you should never be in shorts with more than 30% short interest outstanding. So that's some of the changes that are taking place right now.
But Troy, to build on what Tom was talking about, there's sort of a larger question here. Can hedge funds get really outsized value? Can they really find alpha in a world dominated still so much by central bank liquidity, a world that has proven inauspicious, I should say, for hedge fund performance over the past decade?
Well, inauspicious is a strong term. I mean, the hedge fund industry as a whole did very well last year, particularly protecting capital in March. It's always been challenging to make money on the short side. Most investors expect to lose money through shorts over time, but one of the key to having short positions is to stay in the game, right? To mitigate downside in months like March or Q4 of 2018 or during the Eurozone crisis, so you can protect the downside and then go on offense. That being said, and we talked about this last time I was on, the industry is certainly more net long than they've been in quite some time because, again, of that cocktail of, fairly good virus news, powerful money supply, a never-ending fiscal stimulus that many would argue is too large at this stage of the game. So, yeah, alpha on the short side's always been hard. But fortunately, there's been both the past year and so far this year, there's been more alpha on the long side and obviously negative alpha on the short side.
Final question for Lisa. Drum roll. Have we got an asset shortage, Troy?
Let's do it.
This is for Lisa. This is dedicated. That was the dedication.
Oh, okay, sorry.
Do we have an asset shortage? Do we need to issue more debt, Troy?
That's a great question, John, because, when people look at deficits, what they always look at is the liability side of the balance sheet, and they don't look at the asset side of the balance sheet. So, as the Fed